I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. It is May 23rd, the Mortgage Brothers podcast show, interest rate update. Again, Monday, and this is for informational purposes only.
Yeah, that's right. Remember, folks, we're smart, but we're not that smart.
That's right. No financial advice here. We're going to go over interest rates right away. But before we do, also, be sure to subscribe, like, comment, send us any questions you have below, and let's just go right into it.
Yeah, can we give a quick shout out to two siblings with their birthday today?
Oh, yeah.
Maisie and Danny.
We have,
two siblings.
Yep, a brother and a sister, same day. How many years apart? Probably 10 years apart.
10 years apart,
8?
yeah.
Something like that.
Yeah. Anyway, happy birthday, guys.
All right, 30-year fix today. We see the same 4.875 where they were on Friday, and the 15-year fix conventional also at 4.125, same as Friday.
The 5-year ARM is 4.49. The 30-year FHA is 4.5. The 30-year VA is 4.5.
And here are the loan assumptions for conventional, FHA, and VA. So we use these credentials here to get the pricing here. And remember, everyone, there's no points associated with this pricing.
That's right. It's not like going to the airport and checking in your bag and having to pay an extra fee.
That's
there
right.
are no extra fees with these rates. Other lenders will. They will charge you extra fees.
Yep, I was just online, and I noticed, you can get 3.8% fixed. And then, so what they're doing, of course, they have in tiny little print, they say 15-year fixed. And then there's like 2.5 points.
Right. And then they also have the loan assumptions that are like huge. You got to buy like a $800,000 house or something.
Yeah. So it can be very deceiving, especially when you're looking online. Again, you want to do your research, but this is these quotes here for no points. Today, what we're going to do is go through these charts. I think we have 4 slides, and the first slide here is showing the country, the last quarter, what the appreciation was for all the states. And we can see that we live here in Arizona. We see about 4.6% in appreciation. And again, all across, look at Florida, 5.2, California, 3.57, New York, 2.1. You know, who wants to live in New York nowadays?
We're like the weathermen, going through here, picking out little tiny states.
Yeah.
But it is interesting to look through it. You may know somebody in a particular state, but if you were just to compare on a macro level where Arizona compares to California, North Carolina, South Dakota, it just gives you great perspective. Look at Idaho. It's only 1.78.
Yes.
You wonder, why are some of these states so low? There's lots of factors involved.
Yeah.
But Arizona's a great place. Look at that number there for the quarter. That's what it typically looks on a really good year for the entire year.
Yeah, that's typically
it's a quarter.
Right. So let's go right to the next slide here. This is the year over the last year. We see almost about 17% on the national average for appreciation across all states.
Mm-hmm.
Of course, where we are at Arizona, 27%.
Yeah, well above the average.
Yeah.
Wow.
And again, it kind of in that same trend. Florida.
Is there
Arizona,
anyone higher than us?
Look at Nevada.
Tennessee's at 24.
Mm-hmm.
We might be the high.
Yeah, we're the highest on that slide.
Wow.
All right. So next slide. In the last 5 years, average appreciation over the country is almost 53%.
Mm-hmm.
Let's see anything that kind of Tennessee at 71.
Boy, so that almost doubled. Almost doubled in the last 5 years.
Mm-hmm.
Wow.
Look at Idaho, though, 118%. A ton of people coming from California to Idaho, Oregon, the West Coast. I know Idaho, Boise area, big time.
Yet that was the low number that we just had for just the 1 year. So when you compare, again, multiple different factors here, very interesting charts.
And then we're going to go back to 1991. Again, how many years is that? That is now 31 years.
33, is that? Yeah, 31.
Then when we have 274% average, but in these, you look at Arizona again, 400%, Florida 355, Oregon's up there at 488. I think that's the biggest number on this chart. Midwest here, we see smaller numbers over these last 30 years. Illinois at 150. I think Illinois is
That's a small one, isn't it?
Is the smallest appreciation average.
Yep.
Alabama at 205. Mississippi 170. But California 290. again, and I wanted to, a lot of people are talking about what do home prices do, and I thought it was a good idea to show prices where they were in the past. Now, where are they going in the future?
You know what? And can I just jump in real quick? I was looking at this slide before we were going to show it, and I realized there's two different ways that you could look at this slide. You could look at it from oh my goodness, look how high pricing has gone. Okay, that can be a little bit intimidating. The other hand is if you don't get into a home, likely we can look, back 31 years from now and see numbers like this, even if it's only 300%.
Yeah.
Over 31 years, 300%. Holy cow.
Yeah.
That's incredible.
That's right. And again, inflation has a lot to do with why these prices why these appreciation is so high. I mean, everything's gone up, right? I mean, back in 1991, you probably could get I think a gallon of gas was probably 90 cents. I think that a gallon of milk was probably 90 cents or something, maybe even lower. But the point is, we all know that. We all know that things were a lot less.
Yeah.
But we have this tendency to say, oh, it's too high.
It's just too high.
It's a bubble.
Right.
History is just, it's a hard thing. When you look back, I mean, I was just watching this show about real estate in Arizona. I mean, and I think homes were in the 30s and 40s. The median home price was like $4,000, and yeah, they probably thought they were in a bubble too. And
you can also, I just had this thought. Okay, so in inflation, some people can say, oh, that's just kind of fake. Everything's costing more. Okay, yes, everything's costing more, but can you sell a loaf of bread? Can you sell a gallon of gas? Can you sell a gallon of milk? No, you consume those, you eat those, and they're gone. The house, you get to sell.
Yeah.
So if you have the option of buying something that you consume or buying, something that you can potentially sell in the future, or not potentially, you will sell in the future. That's where they talk about hedging, getting into that home because it protects you because you're on that boat rising with all tides.
That's right. Now, Fortune magazine came out with this prediction of 11% of appreciation. They see 11% over this next year in 2022. Now, in 2023, they do see a 3% appreciation, so obviously a slowdown, probably in anticipation. The lower rates causing lower appreciation. That's very plausible. But again, inflation's driving driving prices.
And when you look at the 3%, that's where they kind of want it to be, in that 2 to 3% range, and that's what the feds are trying to do. So it may look like a negative, but it's actually a positive. We're going from a very high to a more normal.
That's right. So if someone's looking at a $400,000 home, it appreciates 3%. That is
$12,000.
That's right. That is $1,000 a month.
A month.
Okay, so it's just 3%.
Yeah.
Inflation's at 7%, but if you just say 3%, $1,000 a month, that's how much that home will be worth more next month.
Yeah.
The month after, the month following. But actually, that's anyway. That's something
that's big.
We're going to continue to follow this as we do, talking about inflation, talking about where home prices are going to go. We're going to track interest rates, and just stick with us, folks. Hope you're having a great day, and take care.
Hey, thanks a lot, folks.
Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com, and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.